next, we take a look at the impact of the short-lived martial law declaration on the South Korean economy, starting with the initial shock to its eventual recovery.
South Korea is again starting to see signs of an economic recovery after a series of events behind major uncertainties, such as the shift of power due to the failed martial law declaration and the finalization of tariff negotiations. The Bank of Korea has since projected South Korea's growth rate to be 1% this year and 1.8% in 2026. Next year's projected growth rate is higher due to a recovery in domestic demand and resilient exports, particularly semiconductors. The International Monetary Fund has also raised its next year's growth projection for South Korea to 1.8%, following this year's forecast of a 0.9% increase. South Korea's quarter-on-quarter GDP saw a contraction in the first quarter of 2025, but has since started to rebound. Also, over the past year, South Korea's consumer sentiment has kept growing since hitting 88.2 points last December due to Yoon's brief imposition of martial law. The Composite Consumer Sentiment Index, which is considered optimistic when above 100, surpassed the threshold in May and has continued to climb. In November, it reached 112.4, marking the highest level in 8 years.
As uncertainties eased after the end of martial law and expectations of economic recovery began to form, consumer sentiment appears to be rising as well.
South Korea's benchmark KOSPI has also seen a sharp rise of over 66% in 2025, especially after the new government took office in June. The index increase reflects the government's strong policy to shift money flows from being heavily focused on the real estate market to the stock market. Along with the finalized tariff negotiations with the US and the strong performance of AI-related and export-focused stocks, the KOSPI has recorded the highest increase among major global indexes. However, despite the improvements in economic conditions over the past year, there are still some concerns that South Korea needs to address to move forward. Data from the Bank of Korea and the Bank for International Settlements shows that the Korean won, compared to major trading partner currencies, fell to its weakest level in 16 years and 2 months as of April. Also, the $1 exchange rate is now trading in the level of 1,471 per US dollar, which saw an increase of 6.2% in 6 months and a 32.7% increase over 5 years. The Lee Jae-myung administration's expansionary fiscal policy has helped boost the country's economy, but at the same time, it has put pressure on the accelerating national debt. For example, the budget for next year, set at 728 trillion won, is 8.1% higher than last year's budget. Also, it is widely expected that the country will see an even higher annual national debt with the issuance of at least 100 trillion won worth of bonds. But experts here say where and how to allocate money is more important than the absolute amount. In 2025, South Korea navigated domestic and international uncertainties while establishing and implementing a new national agenda. As 2026 approaches, eyes are on whether the Lee administration's fiscal push will deliver sustained growth and bring stability to the volatile foreign exchange market.